Now, the US inflation has eased more than expected, but still towering 400% higher than the Fed's annual inflation target. The consumer prices in July slowed down to 8.5% from 9.1% year-on-year increase in June. Experts say falling gas, travel expenses, airline tickets, hotel room, clothes prices, they've all provided some relief to US citizens from the pain of high inflation. Although inflation cooled down to some extent, it is still way higher than US Fed's target of 2%. Experts say two-thirds of the US economy is based on consumer spending. To ease in inflation, it's good news for the US economy, of course, as well as it is to add more dollars to the currency cycle.
The Consumer Price Index is a basket of different items that make up the CPI. And it gives us a sense of what prices look like and how they're changing, if they're going up or if they're going down. It's very important because in the US, two-thirds of our economy is based on consumer spending. And if the CPI goes up too much and it's too high, then the consumers have a hard time actually purchasing more goods, and it will slow down the purchases and therefore slow down the economy. So seeing today that the numbers came down to 8.5% from over 9% is a positive move.
Now, the decline in travel-related prices helped lower the core inflation to just 0.3%, while prices in volatile sections of food and energy trod carefully in July as well. The investors in markets in the United States cheer the new inflation data as it raised hopes that the Fed may not go for aggressive rate hikes in September. Wall Street rallied to close more than 1.5% higher.
We are expecting a 50 basis point increase in September, followed by perhaps two more 25 basis point increases. So I think it's important for investors to expect continued rate increases at least through the end of this year before the Federal Reserve may take a pause.
Meanwhile, the US President Joe Biden has said that the country is seeing signs of ease in inflation, but the economy could face additional headwinds in the months ahead.
We're seeing a stronger labor market, where jobs are booming and Americans are working, and we're seeing some signs that inflation may be beginning to moderate. Now, I want to be clear. With the global challenges we face, from the war in Europe to disruption of supply chains and pandemic shutdowns in Asia, we could face additional headwinds in the months ahead. Our work is far from over, but two things should be clear. First, the economic plan is working, and second is building an economy that will reward work.
WION is now available in your country. Download the app now. Get all the news on the move.